Hi, everybody. Jaden Bax here with Avenue Financial from Crossfield, Alberta. I'm joined as always by my cousin Mike Parkinson of Dominion Lending Centers. How you doing, Mike?
Great, Jay. How are you?
Beautiful. We're going to get right into this one. We're a quick spin off of our HELOC home equity line of credit conversation that we had in our last video. It was actually something Mike mentioned in the end, end of the last video as well.
I
We're
spilled the
talking about
beans.
all in. You spilled the beans, couldn't help yourself, got
Sorry,
himself
man.
overexcited.
Yeah.
We're talking about all-in-one mortgages, which are a mortgage and home equity line of credit combo. Really interesting. These start at the only way you're accessing these is if you have at least a 20% down payment. And everything starts from there. You're not looking at any insured mortgages for this type of product. It's all insurable or uninsurable, but nothing on the insured side. And so the really cool thing about an all-in-one mortgage is that the ability to create more room in your HELOC as you pay down your mortgage. So you could start with a HELOC you can only access $1, and as you pay down your mortgage over the years, that HELOC grows and grows and grows, and so you can access that equity in your home to do whatever kind of project you want. Mike is the expert of experts
Oh,
on
yeah.
all-in-one mortgages. This is a huge part of his portfolio. So he's going to dig a little bit more into what they're all about and why you might want one.
Yeah, I do a lot of them, Jay, because a lot of my clients that I work with have a lot of equity in their homes, repeat clients. They're looking at restructuring, refinancing, or they're selling a home, buying another property, and they want some flexibility. The thing I like about them is I firmly believe that they're a fantastic product to have if you have lots of equity in your home. Why not set it up this way? Yeah, there's pros and cons to everything. But I like it because the couple lenders that I like to use, typically banks, for this product, you can split your mortgages up. You can have some lenders allow you to have three different mortgage tiers and three
Yeah.
separate secured lines of credits, which are phenomenal if you're an investor, maybe wanting to split up how you're allocating your funds, where they're heading. It's easier for your accountant to follow, to track the interest you're paying on the funds. But there's pros and cons to it. But like what Jaden said that I really like about it is I always set my clients up for, if I can, so that as you pay the principal down on your mortgage component, your line of credit component gets bigger up to that value that we get you approved for originally. And another nice thing about some of the products is that, as we mentioned before, it's a collateral charge. And if you wanted to take more out down the road, let's say your borrowing limit on your was 250 grand, and you want to dump it up to 350,000, and you have equity in your house and you qualify, there's typically no legal fees with a few lenders. So it's things to know. Every lender is different when it comes to this. We talked about the secured line of credit, of making sure you understand if you can or cannot turn it into a regular mortgage down the road. There's just so many strategies that you can do with these products. They're wonderful.
Yeah.
Some lenders limit only to like one mortgage and a line of credit, and they
Yep.
don't allow it to increase automatically over time. So everybody's different. Credit unions are a little bit different as well. So I know you work with a lot of them out there, Jay.
Yep.
And like one of the credit unions out here I work with, they'll allow up to like 9 components, and plus you can have like credit cards under it. Like there's so many things you
Yep.
can do, right? So it's a very flexible product. Are you seeing that from some of your?
Absolutely. Absolutely. And honestly, the beautiful thing about the all-in-one for us is, I get clients sometimes that we're putting them in that product. And they say, well, you know what? I don't need a home equity line of credit. And my answer to them is that absolutely you don't need that today. But if you're not drawing down on that, it's not costing you anything extra, right? And so all it gives you is options, right? You know what? You don't know if all of a sudden the roof needs to be redone, and you didn't get the bonus you thought you were going to get this year. Just to be able to have access to that kind of thing in those emergency situations. And then the really beautiful part about it, and if you're working with the right broker, you can really take advantage of this. It's like Mike said, maybe you get into that line of credit for a higher amount than you wanted to for whatever reason, and you're just finding that you're not able to pay it down on top of everything else. Convert it into a mortgage at a lower rate. Convert it into a different product, and so you're lowering your rate. You're still paying the same amount of money, you're paying on the same amount of money, but you're paying a lower amount for that by converting it into to an actual mortgage product, right? So
Yeah.
there's just plenty of different ways to look at it. We just think the all-in-one product is fantastic for anybody who has over 20% equity in their home. It just gives you tons of options, and would love to talk to you about it. Call me out in Alberta. Happy to chat about it. Once you talk to me, I'm probably calling Mike to make sure that I know all the little details, because he's the
We'll take care of
all-in-one
you together.
master.
We'll take care of you together.
That's right. Yeah,
I bounce things off Jane all the time. He bounce things off me all the time.
that's right.
So it's
And if
great.
you really want, we're happy to do a conference call. But if you're in BC, don't even bother calling me. Call straight to Mike. He can tell you exactly what you need to do.
All right. Well, thanks everybody, and we look forward to another Tips for Mortgage series next week. If you got any questions, we're happy to chat with you. Have a good day.
Yeah. Yeah. See you guys.
See ya.